The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 30th. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to call on in, pick up that phone. Now is not too soon, 877-927-6648. If you can't do that, you can send me an email, steve@tfnn.com. Just make sure in the heading you put something like Trader's Edge. That would be good. And I'll know that it's an email coming from you. And inside the Tiger's Den, you can send me a ping, but you can't do that. So why don't you folks send me an email as well, and I'll be happy to take a look at whatever it is that I can do. Of course, in that stage there, it's probably easiest to call in. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow trading down 35 points. She's trading out at 21,046. S&P is off a point, so a flat market out there. NDX 100 up nearly 10. Russell 2000 off 10. The semis out here, they're up about 9 points, up 0.75%. Gold is down $6. Silver's up 8 pennies. The spot volatility index up 50 cents, trading out at 10.30. The leader out here dollar-wise is Bitcoin up $32, trading out at 4.37. Tesla up $9, nearly 3%. Multicolor Corp up 7.75. About 10% to the upside. Amazon trade out at $9.99.69 with $3.91 out there. So tinkering with trying to close above that $1,000 mark. No reason for it not to. Whirlpool Corp up $3 to the downside. Priceline is leading the charge. About 0.6% to the downside, off $11. Mercado Libre off $7. Tesaro down $6.61. Chipotle off $5. Buffalo Wild Wings down 5 as well. So let's begin. What are the markets doing? Wasn't with you on Friday. Kind of a flattish type market out there when all was said and done. Today we're trading down just a bit. It's today what's going to be important. Now I'm speaking to swing type traders. It's all going to be about today's close. Long term, you already know our position there. Long term with regard to the S&P 500, long term bullish. Markets are going to be priced much higher than where they're at today come Christmas time. In the meantime, there could be a little triptych detour out here. We haven't really received that message across the board. So today's close will be important out here to provide us with at least an indication as to whether or not that has begun. Where do we begin to take a look at that? Well, what I would be doing is I would be taking a look at this advanced decline oscillator reading. This is the bottom panel on the screen on the chart that you're taking a look at right now. Really a set of 4 charts out here. New York Stock Exchange left-hand chart. You look at the very bottom panel. You'll see the reading as we speak right now is -1.2 point something. It just keeps recalculating out here. The important thing is it's at the minus level. Now, I don't know where it's going to close today. What this means at this stage, at 1:10 in the afternoon, there have been enough net declining issues for the day to take that oscillator reading, oscillator being the difference between 2 exponential moving averages, in this case here, 39 and 19, and take that calculation down below 0. When you get below zero, if you close below zero, it says that it is the sellers that are in control. Now, whether or not the sellers, it's like playing a game of football and telling you which team has the ball if you just look up at the scoreboard. Well, our scoreboard happens to be right here in front of us, and at this stage, it's telling us that the sellers are the ones with the ball. Now, on a closing basis, you need to close below the zero line. Then next, and this is key, and this is muy importante, tomorrow there would need to be follow-through. What happens if we don't get that? It says that really the sellers just fumbled all over themselves out here. Now, in the case of the NASDAQ Composite, which has been the strong indice out here, and it's really just trading down just slightly, just sideways out here, so no big move, but we can see that the market breadth inside the NASDAQ Composite, that is chart number 2, is also below zero as we speak right now. The Dow is not. The Dow has just simply come back to fill the gap from a few days ago, so it's really testing a level of support. At this stage, you'd call it a test and rejection out there. If its oscillator could also close below zero, then you could have a unanimous with regard to that advanced decline oscillator reading as to what the markets are intending to do. I say intending because they need follow-through. They need for that net advancing issues to continue to stay below zero the next day. Now, there's promise. But it's just light promise out here. Let me switch over here. We're going to take a look at the spot volatility index because this will be the next key out here. Is it on this chart? Yeah. It's going to be the price point of, let me move my little marker over there, and 1020. 1020 is the number to be paying attention to today. If the markets are beginning to turn to the downside, the spot volatility index will close above that level. Now, it's trading at 1031 right now. There's another potentiality here. Any close above the close on Friday, which, by the way, that close was $9.81. Let's take two approaches here. Again, we're just talking about swing trading type of individuals out there. And you don't have to be a swing trader. You can be a long-term trader, but just try and understand these patterns inside the market. So this is how the market communicates to you and I. If the S&P were to close higher today, have a higher closing high than it did on Friday, than it did on Thursday, and the spot VIX index were to have a higher closing high, that's one of those little nuance patterns here. I'll go ahead and explode this chart up that are the types of markers that occur before some type of decline. Doesn't tell us what type of decline, but just simply when some type of decline occurs out here. If you're looking at this chart, the very top portion is the closing price of the S&P 500. We've dressed that in red. And in blue, we have the closing price of the spot volatility index out there. So you can see when you've got rising tops rising tops on the S&P, rising bottoms in the bottom chart out there. Now you can't use it as a timing tool. You've got to use some other elements from a timing perspective. But it is a very important signal to let us know what is going on inside of the market. So the number that you're going to be paying attention to today, in addition to all the net declining issue aspect inside the market, is going to be, well, I've just got to move over here. What is it? It is, right now it's it is $10.20. And I don't expect that number will change throughout the day. 10.20, good buddy. This is Steve Rhodes with TFNN. We get back. Let's continue looking at the S&P 500. I'll go check my emails, see if there's any requests out there. We'll go take a look at Goldilocks. We'll look at Hi-Ho Silver, Texas Tea, Light Sweet Crude. We get right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today.
With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So Dow's off 41 right now. S&P still down about 1.5 points. So I mentioned let's do this in order. I didn't see any email requests out there. So let's do this in order. And I'm focusing right now on the S&P 500, which is good in considering we were also taking a look at that spot volatility index. So you've got a clue out there as to what the markets are trying to communicate to us. And we're going to go take a look at and we need to get back to the NQs out here, the NDX 100. But I just want to show you what's going on inside. And you know how I love to say this. This is the ETF, the RSP. That is the Guggenheim, and I do mean Guggenheim, S&P 500 equal weighted ETF. Now, what you and I love to do when the weighted indice, in this case here, the SPY, a weighted indice, when this sees new highs on a closing basis, remember we're using a line chart here, so it's just showing us the closing price. When it's making new closing highs, as it has, it began making those new closing highs out here May 23rd. A confirmation that you and I like to see is the equal weighted version of this do the same thing. That is the top portion of my screen. There's your red line, horizontal line going across. You can see that that has not occurred out here. Now, is it going to be the S&P 500 that would drag the markets lower? It could, not likely to be the case. Is it going to pull the markets lower and the NQ move higher? Well, that certainly could be the case out here. But at this stage of the game, again, just speaking specifically only about the S&P 500, the message here is there is trouble in River City. Now, we do not have that same message inside the NDX 100. There, what you know is that we use the QQEW. And you can trade these ETFs too, by the way, if you want to. Certainly have them in your portfolio. QQEW, that's the First Trust NASDAQ 100 equal-weighted index out here. Right now it's trading out at 54.04. It's actually at a new closing high right now. 54.02 was Friday's close. You're at 54.04 as we speak right now. And here what you're also looking for is some type of divergence. We don't have it here. And what that says to you and I is that we have to pay special attention to the NQ out here to see if there's any kind of topping signal whatsoever that would give us an indication, again, swing type trading only, that the markets are getting ready for their normal, hey, happy summer to you, that the markets are also ready for their natural summertime. I'm going to go out to the beach. I'm going to, take some time off out here, well-deserved time. Because, hey, how do you feel? Well, typically when you go on vacation, you come back, aren't your batteries supercharged out here? One day off doesn't really make a vacation, But, hey, the markets behave the exact same way. So in the case of the Qs, they're still out partying to all hours of the evening, moving to new all-time highs out here. Now, I mentioned the NQ out here because it's just easier for you and I to get a real feel as to what's going on by taking a look at the equity futures contracts. We could spend all our time looking at that ETF, but it just doesn't give you and I the necessary information with regard to the signals out there. And we can, in this way also, we've got more exploratory time because we have more hours worth of data out here. More data is better than less data. Now, if we take a look at the NQ, for those of you that have gone to your members page, you watch that 30-minute workshop that we put up there. Some of you attended live, many of you attended live, that shows you all the patterns that are present at the beginning of every bear market. It's also a pattern that we can utilize to help identify when these equity, when anything, quite frankly, we just use on a daily basis, is forming a top or a bottom out here. And I'll show you that because we'll go take a look at a 30-minute chart inside of both the ES and the NQ out here. Now, as we take a look at this, you're going to notice that a couple days ago, you and I chatted about this, which was that it formed a Tom DeMark sequential count. Now, it just formed the count. Didn't give us the sell signal. In fact, the sell signal today would need quite a bit of a lower closeout here in the 5,700 area. That's 100 points to the downside. I don't anticipate that we're going to see that, but anything is possible. That's likely not possible. That would be confirming that signal. There's other ways to do that, such as utilizing Stevie's red line. That's the better tool out here, a little bit earlier tool. That number's at 57.6884. That'll continue to change, by pennies and maybe a dollar or so up or down. But watch that 57.68 level. If by any chance you were to see a close below that today, well, then that would be confirming the signal here where price is moving higher, doing with less relative energy. Now, why is that really important to pay attention to this pattern? Is it just because Stevie says so? No, I don't think so. It's because it works. All right? We want to take a look at it because it works. So this morning, as the markets were moving lower, we can see that, in fact, when the markets were moving higher, this is the NQ we're looking at on a 30-minute basis with regard to how important is this pattern. If you go back into the time period, the last time that there was a short-term top out here, back on May the 28th, looks like at around 7 p.m. in the evening, price was moving higher, doing less relative energy out there. There happened to be a little Tom DeMark 9 count. That was a setup, different than the sequential at the beginning, quite frankly, of when the sequential can start out here. But the more important thing is take a look at what's taking place this morning on the right-hand side of the chart. Price moving lower, doing less relative energy out there. What shows up? The cavalry. How do we know it's a cavalry? Because you know and I know that the market does talk, walk, and squawk to us by generating bullish and bearish reversal signals. That's how the market communicates to us. If you can put all of that together, which in this case here, we put all that together, then you know the language of the markets. It really is that simple. One without the other isn't going to get you diddly out there. You must have both. So we saw a short-term topping pattern back on the 28th. We've now this morning seen a short-term bottoming pattern. We know the price has run up into its next level of resistance price for the NQ on a 30-minute basis, that being the 58.02 level. That's the top of its TAS market profile. This little retracement we see right now doesn't mean anything. It just means out to lunch in the market. It could mean something different if we saw a close down below 57.90, 275 on a 30-minute basis. I don't mean just poke your head. I mean down and stay down for the count. It would especially have meaning if we take out this morning's lows out here where we had that price relative strength average. So it works on the short term. It works on the long term. It works on the real long term out there, and that's how you and I spot. That's the beginning of how you and I spot those bear markets, or at least a correction, meaning a 10% or more move to the downside, that can turn into a 20% or more move to the downside into what would be called full-out blown bearish type territory. So that puts it together with regard to the indices, what it is that you should, my opinion, that you should be watching, because this is how the market communicates to you and I. So today's close is going to be extremely important out there. Now, I mentioned that we would go take a look at gold, that we would go take a look at silver, and that we would take a look at Jed Clampett shooting at that Texas T, and we're going to do that. But we're going to have to probably do that when we get back from the break. We'll just begin here. I'll just punch up on our screen our market profiles for Goldilocks, down $5.60 right now, trading on $12.62.50. Not really much of a problem. And you know why it's not much of a problem? Because of that yen. So when we get back from this break, let's start off by taking a look at the yen. Then we'll go take a look at gold and anything else that you stay approach with TV.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 50. S&P is down 2 points. We did get a question, listener out there, fellow Denner. We're going to go to that in just a moment. Let me finish off gold and the yen out here so you can see what's going on. Now, when we take a look at the Japanese yen on this chart that we're looking at, it's got a 15-minute delay. Not really that big of a deal. I looked at the futures contract, and so nothing has changed significantly. Now, when we take a look at the yen here, you can see today it's moving lower. It's trading out at 110.70. What does that mean when it's moving lower on this chart out here? What it means is getting stronger against the U.S. dollar as a currency pair. That means that the dollar is getting weaker. Now, in this case here, what it really means, it costs Stevie more to buy sake because it costs me more U.S. dollars to buy sake. I don't like that. Gold doesn't like it either. What gold likes to see the yen get weaker. In other words, on this chart here, move higher. No, I'm sorry. Man, what the heck was I smoking out there? Just the opposite. Hello? My goodness. The yen does like, the gold does like the yen to be stronger out here. Oh, boy. But that was just a brain contusion out here. So in this case, I don't like it because it just simply cost me more to buy sake. That part of it is true. But in this case here, you can see that the yen is moving lower. Now, here's what we know about the yen. We know that it completed a Gartley buy pattern. So if we just take a quick peek out there, a Gartley buy pattern is nothing more than an A to B equals CD move. That's our little lightning bolt. That's what we use to measure price. That's what we just put on the screen out here. And we know that it's referred to as a Gartley because there was a big move off of the lows back in September of 2016. A big move that many would have wanted to catch out there. And when that Gartley completes, and one of these levels could be 1-to-1, 1.272, 1-to-1, 1.618, and so forth out there. And there's ways to identify that. In this case here, it gave you the right signal that the 1-to-1 play was done, was the beginning of the move. Then what a Gartley pattern has is 5 different outcomes. Well, it achieved outcome number 1. Outcome number 1 just simply being a retracement of that A to B equals CD level. If we take a look at the retracement now, you can see it hit Suite 618. If you were going to come to Clearwater, visit TFNN, you would have to go to floor 6, and then you would have to go to suite number 618. Well, the market does that too. Now, does it do it exactly? No, because you can knock on the right-hand side of the door or the left-hand side of the door. In this case here, we use this as a guideline, right? I think they came out with a new movie. The guy who uses just to be used as a guideline, Jack Sparrow or whatever the other character's name is. So it's made outcome number 2. What we don't know is that it. Sometimes that could be it. 5 different outcomes. This could be another A to B equals CD to the downside out here. How will we know if that is what is unfolding? In fact, it could be a very large one. If we just, in fact, more likely than not, it would be the large one. We won't know until we see how price and or if price deals with the April 17th level out here, 108.13. If we see price get below that, well, then we have a series of lower highs and lower lows out there, and that would be an indication of an A to B equals CD pattern to the downside. We don't need to project that until we get there. Now, what does that say? Because you've got this little divergence here with the yen itself, the currency pair, getting stronger, and you've got Goldilocks pulling back. Well, you know what? Gold's on vacation for the day. The move, unless there's been a decoupling out here, it says to me that the move inside of Goldilocks it's real. But it's like playing liar's poker, where you're looking at somebody says, I've got, three threes or something, and and for sure however you play that game, liar's poker. It just basically says you can't trust this move to the downside inside of gold. And if we take a look at gold, now we go back and look at the different market profiles out here, you're going to see that 1260 is a support area. Now, 1260, the reason why I say that's a support area, it happens to be the bottom of its 60-minute profile. That's a very left-hand panel chart on my screen, 1260.40 to be exact. It needs to close above 1262.60 in order to really suggest that, and really what it needs to do is close above 1264.40. So until it closes either above 1264.40 or below 1260.40, just $4 out there, I'm not sure which way this is going to go. The currency pair is telling me that unless that starts to make some major move and rejects moving lower, rejects lower price out there, this says to me that gold ought to say, I'm ready to start moving higher. We won't get a confirmation of that until we see price close above 1264.40. In other words, it could just kind of chop around here and move sideways. The 240-minute chart, that is chart number 2, the bottom of its box out there is 1260.260. Now, both of the boxes on the 60-minute, the 240-minute chart, they're not really structured in a way that's either bullish or bearish. So then you look to see where price is trading. Is it above the box? Is it above the bottom, meaning a support level? And that's where it's a little bit risky right now, regardless of what the yen is doing, because on the 60-minute chart, we've seen two profiles out here, and even though it's trading within, that's why it's got those gray bars. It's kind of neutral, but the 240-minute chart is not neutral, but that bar is not complete. I believe that this bar on the 4-hour basis is going to complete, let's see, 6, that was 11. That is not going to close until about 3 o'clock, so after David White's show out here. The daily chart is very bullish. So from a daily perspective with regard to gold out here, it has a very nice bullish setup and signal. Price is trading above the top of the box. In the case of the weekly out here, in this case, when you come to the weekly, I really prefer to go take a look at the stitched together contract data. I can't recall off the top of my head. I think it is slightly different. So we're going to go ahead and do that right now and give you the slightly different move. Yeah. In the case of gold, the level where price ought to head to is about 1280.30, 1290.30. So that $10 range out there, closing above 1290.30. That would be very good out here. So those are the numbers to be watching there. Now, let me go back and deal with do the best I can to answer the question from John in Philly. He says NDX is now at about 5,800. So we'll go take a look at that. Let me punch that up on the screen here first. I'm actually going to go ahead and put up the monthly chart for the NDX out here. And so the question is, let me get to the monthly time frame, and then we'll expand that up. Not MD, but just simply M. That would work. And the question is, does the rally extend immediately to reach your 5910, the Fibonacci 1.272 expansion target? So you're at 57.94 right now. And what John was referring to is we just took a look at a retracement level. That was Fibonacci number 0.618. When you get above, you make a 100% movable move. That means, in this case, look at the monthly chart above the 2,000 highs. What you do is you look for an expansion of the swing points. Now, in this case here, we're going to use the 2,000 highs. Oops, I got to need to switch back to the expansion tool. Give me a moment to do that. This one here, I believe, is in yellow. So we're going to use the 2,000 high. We're going to go ahead and use the low out here in October 2002. And where John had provided us with the number of 5910, you'll see that now magically appear on our screen. And if you were to look at a monthly chart, my goodness, it is just strong and long, and 5910, it could be not the stopping point. 7301 could be the next level out here. But we'll put that together. Make sure we have that put that together. We'll go look at the daily chart of the NDX 100. It says, 5910, yeah, maybe, but there should be a timeout. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So, hey, and I tell you, I got 2 emails there. Both Dan and John did a great job of in the heading. They put show question. I've been saying, put something like Trader's Edge or something. Show question. Boy, that is so simple to be able to go ahead and pull out that email. So let's go finish up here. Let me switch back. So we're going to get to both of those questions then. And thanks for sending those emails. So we already established that the 1.272 expansion is a real target right now, 59.10, the next potential target inside the NDX 100. Is price going to go up and hit that? Until proven otherwise, the answer, what we would conclude is the answer is yes. Now, I say proven otherwise. That requires both you and I to go take a look at the daily chart for the QQQs or the NDX 100 out here, right? We already established that both the equal weight and the weighted version are both at higher ground. That way, everybody who says it's only 5 or 10 stocks that are making the entire market, both you and I know they're full of, yeah, exactly. That is exactly what you should say. They're full of it. It's just not an accurate statement, not even close to an accurate statement. So far away from an accurate statement, why is it that they actually say that? Somebody needs to come on and actually prove us wrong. They can't. We took a look at the equal weighted. It's at a new all-time high. It means everyone is equally weighting wise, moving to higher ground out here. Okay, let's take a look at the NDX 100. That's neither here nor there, but it is there. It's right there in front of our screen. If we take a look at the NDX 100, what we know is that 2 days ago, just like the NQ, right, the equity futures contract we looked at, that it formed a TD sequential count, number 13. That's what you'll see, one of the numbers on my screen from a couple trading sessions ago. We also know that price is moving higher with less relative energy. It began that process a couple of days ago, 1, 2, 3 days ago, back on the trading day of, let's go take a look at it, should be the day of May 24th. It continued that pattern on the 25th or 6th, 25th. It continued that pattern on the 26th out there. And even today, as it made a higher high, it's doing it with less relative energy. My system automatically draws those lines, so we know that that is a pattern that is present now. Just because it's present doesn't mean that price won't move to higher ground, that it's ready, the market's ready to crack. No, what's needed is you need the cavalry, in this case here, the bearish cavalry, to show up, and they would do that by generating some type of bearish reversal candle. Do we have that now? Absolutely not. If we don't have it, what's it mean? Prices can continue moving higher. So unless we were to see that, John, unless we were to see a price close below Stevie's red line, 57.66.69, the interpretation or the answer to your question, there's only one possibility, and that is yes, that is what is still in play out here until proven otherwise. I don't know when the bulls or the bears, what they're going to do next. We just simply can read the charts and then decide what it is that should be done. So the NDX 100 still looks like it wants to move to higher ground, even with less relative energy out there, again, until proven otherwise. Interestingly enough, earlier we took a look at, we took a look at the ES Mini on a 30-minute basis, I believe. If we go take a look at the NQs out here, you're going to see that they did the same. In a market where it says buy the dips, inside the NQs, they've been the one that have been giving us the biggest signal out here. So here inside the NQ, or maybe we did look at the NQ. I take it back. Maybe we did look at the NQ. Yeah, we did. Well, the ES was making the same pattern. That's what it was. So the ES, by the way, the ES was making it. The Dow was making it. All of them were pushing on the rubber band to lower price, doing less relative energy. Here, in the case of the ES Mini, it also made one of those TD sequential counts on a 30-minute basis. There's the number 13 at the bottom of my screen out here. In the case of the ES Mini, just as long as you brought it up, what I should also provide to you is a number to be watching for from both the bullish and the bearish side. This so-called tug-of-war level out here for the ES Mini. It's 24.12. We're trading at 24.12 and 3 ticks 75 cents right now. So watch that number. Inside the NQ, it's 57.81 that one would want to watch. If both of these equity futures contracts today close below that level, or if they're trading below it tomorrow, you'll know that the message is it's that time out. It's time for the market to take a time out. And that's really what the signals are that are being generated. We just don't have real confirming numbers. What I provided you, though, thus far, really are confirming numbers. Now, we've talked about a number of different patterns out here. And Danny wrote in. So, John, I hope that answers your question. That's what I would be looking at. And goodness gracious, if, in fact, the NDX 100 does show a topping signal, does start moving lower, well, then I can see where the other indices could move lower in a good way, in a nice way out there. Remember, we're in the seasonal cycle where it is normal for everyone to take a vacation, and that includes the participants in the stock market out there. So it's just normal. It just wants to go, and with all the hard lifting that it's done, it'll be blamed on who knows what. Who knows what the so-called catalyst will be. You and I know there is no catalyst. It's just the normal seasonal type cycle out here. So we'll see if that actually kicks in this year. It may just take a hiatus and say, sorry, not going to happen. Now, Danny writes in, so I hope that answers your question there, John. Danny writes in, and he asks, where is the buy in November soybeans? So we need to go take a look at the November soybeans. Let's go do this for Danny in a couple of different ways. First, let's go take a look at the market profiles. Because if you're trading soybeans, you certainly want to go take a look at a 60, a 240, a daily, a weekly set of profiles out here. And voila, that's what we have. When we take a look at this, the only potential bottom, because you're asking the question, where is the buy? If we look at this chart out here, the only one giving you the possibility of such a signal is the 60-minute. See, the color of its bar out there is switched to orange, suggesting that a new profile may appear here sometime soon. Now, we just need to see, is that a bullish structured profile? Is that a bearish structured profile? If we look at the 240, the daily, and the weekly chart, we're so far away from support out here that we can't utilize this set of tools to help us identify a bottom. However, Danny, what you and I can do is we can go take, and I'm going to put the continuous contract up on my screen because on this set of software, I do not have the November beans to look at. So we'll just take a look at the continuous contract. It's trading at the same thing out here. The chart will look slightly different. But what we can see is, let me go turn this off because when I keep this one tool on before the bar is closed out here, it starts to look kind of ugly. Let me just do that real quick. It'll update. There we go. Here's one thing, two things, Danny, that you and I know. Today is going to be or should be, I should say, I can't guarantee what's going to happen over the next few hours, but today should be a TD sequential 13 count. You can see how Friday was number 12. Today the way that it's trading, is going to be number 13. And those are important. Do they always work? The answer is no. You can take a look at the last time that we had a TD sequential count. It was right here. I'll draw a nice big arrow. We'll draw it right to it. There you go. There's the number 13 out here. It's one of the reasons why both you and I use my red line out here. It's why you and I use bullish, in this case, bearish or bullish reversal signals. In this case here would be bullish signals. What we can also see that we have, though, we can see that price has been moving lower, doing it with less relative energy. So where is the buy? The buy may be coming soon out here. What do you do with a pattern like this? Just like inside the NQ, just like on the intraday charts, you wait for the cavalry to tell you it's arrived. In this case here, price can continue to extend lower. But there are two potential bottoming signals on the daily chart for November.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back. Marie writes in and says, hi, Steve, could you review HPQ? HP Inc. is the company name. I'm in it, but have taken some off the table. Should I take the rest? Thanks, Marie. Well, Marie, if we take a look at, and I don't know what your time frame horizon is on the trade, /investment. So let me just try to answer it from a couple of different perspectives, and then you can make a determination on your own what you should do. Now, this is a monthly chart, so we're going to start with the big picture here in HBQ. And what we know is that there is a resistance zone. It was the high of either the month of December 2014, 1859, or 1866. It actually was 1866 out there. That was the high from January 2015. I say that because that is a bearish engulfing candle, and you just take as a resistance zone to be the higher of either of those. Now, you can see it's trading at 1898. It's doing it on lighter volume. What do I mean by that? Well, geez, both in December, you had 509 million shares in 2014, and in January 2015, 494. This month is over tomorrow. You're only at 207. Nonetheless, price is trading above it. Price is also trading above the blue lines on my chart are monthly TAS market profiles out there. So if we take a look at it, let me go ahead and get a line out here. Let's take a red horizontal line. If price is able to, tomorrow, close above 1866, volume or not, in this case here it would be or not, you could have a change in what they would call polarity, meaning you've now gotten above resistance. You prefer to see it with volume. Doesn't always work that way, but at this stage on the monthly chart, closing above 1866 tomorrow, there would be no indication to get out. None that I can see out here. In fact, then this would suggest that you don't have a confirmed A to B equals CD to the upside. If you did, I wish we did on a monthly basis. Maybe we do on a weekly basis. Then what you'd actually be looking at, Marie, is a price target of about 22.42, maybe even higher than that, maybe 26.09. Well, let's put this on a weekly basis. Let's go check out that swing point. On a weekly basis, the swing you're dealing with was January 5th, 2015. Now, what I don't know is that week should have a full week of trading, 116 million shares. Now, as price has gotten above that, 43 million shares back here on April 24th, 45 the following week, then 38, then 47, then 68. This week just began, but you've got volume so far this week here of 8.4 million shares so far today. And you got a shortened week. Still looks like it's going to not be the volume that you need out here. Now, this is the weekly set of TAS market profiles, and you have a brand new one that formed this week. A pullback out here, Marie, says that price should find support at 1820. Right now, you're trading at 1899. If you were to close below 1820 this week, then maybe you could consider going ahead and taking some off the table, because at that stage, then the monthly closes out tomorrow. I would use, on a weekly basis, I would look at that price point of 1820 out there. If you close above 1912, again, it's just another message that it wants to move higher. If we put this on the daily chart out here, daily chart shows one mean nasty candle out here. This is on the trading day of May 25th. Probably earnings. I don't know what was related. Marie, I'd go track it down just to try to understand. It's an ugly candle, but does say if you can close above 1958 at any point in time, then that looks pretty good out there. It was also wave number 7. That specific session was wave number 7. So here's both the bullish and the bearish side of that. I'll put this up on the screen. Wave number 7 is like a 7th inning stretch, although in the stock market, sometimes that stretch can last for a while. And we just simply start utilizing our Chapman wave counts out there. And you pay attention to that 7th wave out here. You can see that was that big candle. 1917 is a price level you'd like to see close above on a daily basis. Well, folks, I hear the music in my ears. Of course, I always hear music. I've got tinnitus. I've got to call that ringing sound something, don't we? Stay tuned. Our man David White, he's up next. Have a terrific Tuesday. We'll see you on Wonderful Wednesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.